All right, great. All right, beautiful. Well, thank you again for having me. Once again, my name is Anthony Crudele, and today we're going to talk about the best tool for confirmation in any market. Now, before we get started, we have to go over this warning that everyone must understand that, hey, guess what? Futures trading is risky, but that's why we do it. But common sense says don't spend your kids' communion money while you're trading futures, because guess what? There's going to be some losers. I can attest to that. I want to talk a little bit about myself. Thank you for that great introduction, but I also want to talk a little bit about myself and my backstory. I think it's always important that people know who they're listening to and understand that, I've been through a lot and know where I started and how I got to where I am right now. I started on the floors in '95. I was 18. At 21, I became a member of the CME, Chicago Mercantile Exchange. I hold an IOM seat. I started my career trading in the S&P pit, but I was a runner in the meets. I was a clerk in the Eurodollar options, and I spent about a year and a half doing that before I got in the S&P. Once I got in there, that pit, that was like unbelievable. It was the greatest. I loved it. I knew once I stepped in there, there was no way I was going to be in any other pit. It was just the excitement, the rush was great. Even though I was a pit trader to start, I only traded in the pit for like 6 months because at the time it was so busy in the 90s that really I could barely stand in there. I was getting muscled around. Young kid in there, it was very political, nobody was really trading with me, so I started trading a new product, and a lot of you probably know what it's called the mini S&P. At the time I started trading it was maybe, I don't even think they were doing 10,000 contracts a day. I was brand new, and they were trying to get traders to do it, so they're like, hey, why don't you come and try this out? So I did it, blew through few accounts. I had to borrow money from traders, friends, family. I borrowed my last $10,000 from my Aunt Flo, and why this is so significant to me was because at the time I had went through 3 accounts prior to that. I went through $75,000 of my own money and borrowed money from other traders, and that was extremely challenging to convince anybody that, hey, what I'm doing makes sense. And I think anybody who's been a trader who's went and lost money, and then you either have to go to your wife or you have to go to somebody and be like, I want to keep doing this, they probably look at you and say, well, you're probably out of your mind. And at that moment, really turned things around for me. I was so scared to lose my aunt's money and I felt so prepared at that moment to be able to finally take things to the next level. I mean, because of course, after going through 3 accounts, I'm like, if this is it, I mean, that was it. I was fortunate to go on a nice run. And really within 6 months I was able to buy a seat, and then really over the next few years I had a year over $1 million, and I had multiple 6- and 7-figure years trading. So that's my story, is how it kind of all panned out for me. It wasn't easy, but nothing really is if it's going to be something that you really love and it's as challenging as trading. It's not an easy road, but I love it, so I continue to push forward. Now, where I am modern day is I do futures radio now. It's sponsored by CME Group and Trading Technologies. It's podcast. It's free. It's futuresradioshow.com, and you can go and check it out anytime. And I talk about what's happening in the market on a week-by-week basis. We talk about anything from technicals, fundamentals. We bring guests on, and it's free for the industry. I had this idea to CME Group several years ago. And I said, hey, you know what? I was doing TV. I've been on Bloomberg, Fox Business News, CNBC. I did all that. And I thought, like they asked me questions, they give me 30 seconds to answer. It's like, what am I really helping anybody with? Great, you're on TV. Okay, now what? I said, why don't we just do a show about, helping traders out and really talk to other traders and, not just, going through the media stream of TV. We can actually spend some time and talk to traders and discuss really what's happening in the markets. And that's what we did this. I was actually invited because of doing futures radio and because of my accomplishments as a trader to the Global Financial Leadership Conference. Here's a picture of me and Schwarzenegger. I'm only 6 feet tall, so you look at, he's not much bigger than me, obviously. And it's funny, I always make this story when I show this picture. I'm like, the Crudeles, we're known to having big heads. Until I stood next to Schwarzenegger, I think he won the head contest. Neither one of us could probably wear hats, but either way, was just you don't really get any sort of accomplishments by being in this business, right? You make money, that's great, but no one ever really recognizes it, which in part of that I really liked, but kind of just being out there, no one really knew, I was being really successful at trading, and then, starting to do futures radio and help other traders, and then now starting Beacon Trader, really is just a whole lot of fun and exciting for me. So I want to congratulate all of you for being here today. I think it shows your true commitment. I mean, in the beginning of my career, I surrounded myself by the best traders in the world, and by listening to them and asking them questions that really helped me develop my indicators and strategies. And so I really think that you have to really commend yourself to attending these webinars. And why I say that is because, look, it's not easy, and it's not easy to ask questions. Because I know at the beginning of my career when I asked a million questions, but nowadays you don't know who you're asking questions to. Out there with Twitter and everything else that goes on, right? So you basically have to weed it out, find some good people, and by attending these webinars, I can tell you you're in some good company today with the other guests that are speaking. Now, this is the first thing I like to put out there, and I remember going through the internet one time and like seeing this, and I looked at it and I said, you know what, this reminds me so much of trading, although everything reminds me of trading, that's what my wife would say at least. Decision, goal, analysis, choice, process, scenarios, alternatives, brainstorming, optimization, risk, action. I didn't just put this together, I actually found this, and I think that anybody who's traded looks at that and says, wow, there's a lot of things I think about. So why I just start with this is because in trading, it's important to know when to make decisions, right? We make so many decisions, and I've said this in many of my webinars and anytime I speak, I always say, I remember reading one time, and I was on blog post, so you never know if it's true or not, right? You read these blogs, you don't know if it's somebody saying factual things or what, but it says that a trader makes more decisions on a daily basis than a brain surgeon. Now, I don't know if that's true, but it triggered something with me, and I said, you know what, I feel like I do make a million decisions. Do I want to buy them here? Do I want to buy some here? I want to buy 25% of my position? Do I want to cover some when it goes a few ticks my way, or do I want to wait, or do I want to move my stop? I mean, you think about all the decisions you're making, and that's why it's so important to know exactly what you want to do. And I really didn't start having success until I had my day plotted out. You're never going to anticipate exactly how the market's going to move, because obviously we'd all be, billionaires. It'd be easy. What I'm saying is I now want to anticipate my process. So that's why today I talk about the best tool for confirmation in any market. Because when I struggled, when I did not have success, it was because I didn't have confirmation. Nothing really kind of bothers me more than when people are like, hey, I got this fib, it's 38 back, or this is a moving average, oh, that's a no-brainer, you buy that, or look at this uptrend, or look at this footprint, they're buying them here, or something that's so like, hey, it's so easy to be concrete and say, hey, you should buy them here, you should sell them there. It doesn't work that way, because if you've traded, you understand that it just doesn't work that way, because I'm not going to buy every fib back. I'm not going to buy every trend line. I'm not going to be able to do that. I can't be consistent with buying every single one of these scenarios. So what do? I look for times where it tells me I should buy it or when I should sell it. And then what we're going to teach you today is building confirmation in your trade execution, because that's extremely important. To be able to sit there and go, I'm going to buy them here. See, I'm an overclicker, so I overclick everything. So I like to have confirmation to help me be patient. I like being able to know when there's a false breakout. I'm going to help you identify some false breakouts. Now, you never truly know when they're happening, but helping you identify them is huge. You're going to identify when markets could reverse. This is also important. Am I going with trend? Is trend about to change? Confirmations, the ones that I've built, can help you identify these scenarios, right? Nothing's set in stone, but we want to be able to identify scenarios. Creating lower risk trade setups. That is obviously should be everybody's number one goal. I want to be able to create a scenario where I can trade risking less. But, that's easier said than done, right? Because how do you do that? So we're going to talk about how confirmation can help you. And building confidence on knowing when to pull the trigger. As I said before, I'm an over trigger puller. I'm somebody who'll sit there and go click, 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 and I'll click all day long. So I need confirmation to help me pull it back and to know when I should be pulling the trigger. And that was really very challenging for me to learn how to do. So first I want to talk about what markets this will work on as I'm putting through everybody here. Actually, let's go back. Stocks, options, futures, forex, bonds, commodities. Yeah, it works on everything. Because confirmation, I'm not teaching you or going to be discussing buy and sell strategies today. I'm not going to say this is a buy setup, this is a sell setup. I'm not teaching you primary strategy. That's for a different day, a different webinar. What I'm going to show you today is that no matter what level you're looking at, you need to have confirmation. You can't just look at a level and say, oh, I'm going to buy it. You just can't do it. I mean, you have to know when you should be buying it and when you shouldn't. So why do I use divergence? Now, what is the word divergence, right? I mean, everybody that I talk to has some form of divergence into what they're doing, meaning that they look at divergence. The indicators, so many indicators use divergence. Now, some of you may not, but a lot of people do. And what I learned at the beginning of my career was really the definition of insanity was doing the same thing over and over again, expecting different results. What does that mean? Meaning that I could just buy every support and resistance line and at some point I'm going to make money because this works, right? I've had so many people come to me and say, oh, Anthony, I'm just not making money right now, but this works. Does it? How does it work? How do you know it works? And the way I started to really make money was in times of when the market would give me confirmation that this area should work. So what I started to do was narrow down scenarios, right? And after years of trading my primary strategy and really having no success, I really learned that buying the low and selling the high is almost impossible. So I first of all want to say that this is something that really is going to teach you that buying the low and selling the high, this is going to help you understand that really that's not realistic. Any sort of strategy that's like, we can buy the low and sell the high, I really firmly believe that that's just nonsense. Having traded millions of futures contracts, I know that if I buy the low or buy the high in my strategy, that was really by chance. I'm really not trying to do that. I believe that by being the second person in on a retest will give me a better trade with lower risk because I could go off of a previous low or the low that maybe or high that had just happened. And I like the retest to see if it has divergence. Is price diverging with my indicator? And I've learned that by being the second one in, I tend to take the move a little bit longer. By being the first one in trying to buy highs or lows, typically I'd be the first one out. So I've developed my strategies and my confirmations to really to say, you're not going to try and buy a high or low. I think you're going to do much better on retests. So to get the most out of my strategies, I started to use divergence. Like I said, this is not a buy and sell strategy. This is showing you confirmation. And I think that every successful trader, if you ever talk to one, will say that, well, I do things when I have confirmation. And that's of massive importance. So how do you become a better trader by using divergence? Here's a picture of me and my wife. She hates that I put this in there, right? Anybody out there that's married knows if you share pictures of your wife, you got to make sure you get permission because otherwise, she's gonna be pissed. She might make sure she likes the picture. So I use a picture that pretty much if she doesn't like this picture, then I've got a problem, right? So I use this one of her and I say, well, why use confirmation? Well, what is it? Why am I showing a picture of myself and my wife? Because when the two of us disagree on a decision to move forward with a topic under discussion, so we've been working on our kitchen. She wants this countertop or she wants that. And I say, well, I disagree. I don't think that looks good. Not like I'm the Mr. Artist in the house and I have that part of my brain for design. Obviously her opinion is better than mine, but if I don't like it, then she's like, maybe I shouldn't move forward with this, or she thinks about it. And I think that that's the same way for trading. It's like if something confirms what you're looking at, then you go forward with confidence. If something disagrees with what you look at, then you say, okay, maybe I'll trade it smaller or I won't trade. That's huge. Identifying when to be big, when to be small, and when not to trade. Confirmation will help you with that. Now, if we agree on the topic, my wife and I, and we say this is what we want to do, then boom, I go in full position and I'll do it. Because you have the confidence that you both agree. That's why I like confirmation. What does the research tell us? Now, as I said, this is not buy and sell indicator. This is, okay, this is confirmation that what I put together about divergence really works. What do I mean? So I look back and I went to a programmer because I'm not one by any stretch. I said, hey, can you take a look at this? I want to see in these scenarios, what happens? He said, okay. We programmed it. We went back. We looked. And it came back to me, and I was like, pleased to see these results. 8 out of 10 times markets reverted back to the price it was trading at the highest or lowest mark point of the divergence on the 60-minute chart or next to the bar with that session. I'll show you what I mean by that, because these are specific situations, right? Not 8 out of 10 times does divergence work. That's not what this means. I'm going back to a specific instance because I want to see that when I'm looking at divergence in a specific way, if it actually works. If he would have come back to me and said 4 out of 10 times, I'd be like, that's not enough. Because remember, this is not buy and sell. This is like confirmation. So it could stay divergent for a period of time. It's not giving you prices. So it's important to know what this research tells us. So what does this research tell us? It tells us that my thinking was correct, and when markets have divergence, they revert back to the mean more times than not. That's all you want to know. Does it do it? More times than not, because nothing's foolproof. And if I can get 7 out of 10 times, 8 out of 10 times on a specific look, I feel very confident when I see it, right? So I also want to talk about something, and we're going to talk about this more when I discuss the class I'm going to be hosting. The markets experiencing divergence on the bigger picture had better results than with trend than going against the trend, meaning that, so let's just say that a market's trending higher or lower, right? Meaning that, so like right now, the dollar yen, right? The dollar yen is trending lower. It's making lower lows as we speak today. It's why equities are getting slapped. There's other reasons as well, but it's definitely a part of it from the BOJ last night. Now you go lower. Now if we rally and we get divergence, it's more likely to work in the bigger picture trend, right? For a short because the trend is down. That's all that means. So that's important to know. And the reason why it's important to know is because I think a lot of you probably look at indicators or you look at things and you say, you probably look at them on both sides and you really don't identify that when you're looking at something with trend that it actually is going to be a stronger indication than when you're going against trend. And most people don't put that into their execution. So I just want you to remember kind of that type of thing. When you're going with big picture trend, daily, weekly charts, and you see divergence on the shorter term, that's a stronger indication than going against trend. Now, let's talk about how divergence develops on stochastic. Now, today we're going to talk about stochastic and MACD divergence. Now, what I have in front of you is my chart. I took some of my indicators off to show you, and I pull up a NASDAQ 60-minute chart. Now, this is just last week NASDAQ 60-minute chart. So something you should know about myself is I do a lot of these webinars. I speak, like I said, I'm always talking with traders. I'm in the mic in my trading room every day. When I do presentations, I show you the most recent charts to show you whether things work or didn't work, because I believe it's important to stay current with markets, because I don't want to show you charts that from 2 years ago, because things have adapted and changing. I want you to see what's happening now. So here is a stochastic at the bottom, and what I want to show you is on this particular chart, okay? I want to show you that the NASDAQ went and made a low right here. Now, it made a low out of this range. You can go back, and I'm not going to get into super specifics how you determine highs or lows, but basically I look at it and go, after a market makes a high or a low, 2 bars later, which would be this bar right there, as long as that low is not taken out, that could be considered a short-term swing low, okay? So there we have it. Now, I go and I look at my stochastic, and I see, did my stochastic get below 20, that's where they would consider it an oversold scenario. So I noticed that right there, if you follow the yellow dot. Now the market goes and it makes a lower low in the NASDAQ, right there, then it makes a lower low in the stochastic, or higher low, I should say. That's divergence. One's pointing up on trend, one's pointing down on trend. Now my indicator draws it for me on the line, and the reason why I do that is because I don't want to sit there and try and pay attention to it every time, so it draws it from point A to point B. Where was it started, where did it go? And it shows you right here that we were divergent. We made a lower low, and over there we made a higher low. Ended up, NASDAQ popped, right? We saw a market move higher. Now, okay, that's one example on this chart. I'm just showing you how it sets up. Now, Let's go back again. Once again, market makes a low. I wait 2 bars, no matter if you're looking at 1 minute, 5 minutes, 60 minute daily, doesn't matter. Market makes a low or high. 2 bars later, that low is not taken out, which is right there. I go down and I look at my stochastic. Stochastic got negative 20 or greater. Okay, great. Now, market goes and it makes a new low. We make a higher low in the stochastic. NASDAQ rallied. Everybody with me on how it develops. Very simple philosophy, right? So it has to make a higher high or a lower low when you're looking at the divergence. You can't go, well, look at it right here on this bar. The stochastic was divergence too. Well, it didn't make a lower low or a higher high. All right, so that's extremely important. So we look at this on, remember I said before, I'm never going to buy the high. I'm never going to sell, or buy the low. I'm never going to sell the high. So what I look for is a retest of lows or lower highs. And at that moment, I make a decision using divergence. Are we going lower with divergence? Are we going lower not with divergence? Right? So if you just go back and look at a scenario like this one right here, this low right there on the left, we went down and got near the low. Okay, let's just say hypothetically that low would have been at or equal to this low. The stochastic would have been lower, so it wouldn't have been divergence. I'm just giving you, some hypothetical looks here. It's like, so I look at it when they get at or near lows, on retests of lows. That's what's important to notice, to know when you're looking at divergence. Now, let's take this back, and we're going to go to the next slide. Now, how does it develop on MACD? Simple. MACD, I have a calculation that tells me when MACD is overbought or oversold. Or not necessarily overbought or oversold, not like the stochastic. It's more or less like, is it in an area where the MACD, because if the MACD is just chopping around the 0 line, you could see too many divergences and it can be confusing. So what I look for is, same scenario, market makes a low, what's the peak low of the MACD? 2 bars later, you go, here we go, MACD's, there it is. Now, MACD goes up and it has to go back up and it has to touch the 0 point, like it does right here. Okay, once it does, it resets it, and I want to see what's it doing on a lower low in this case, or a higher high. In this case is a lower low. So now we go lower low, right, on these 2 bars. My MACD indicator draws dots at the bottom of the bar, and we made a much higher low in the MACD, right? Everybody see this? Now, that happens. Boom, we ripped up, moved up. That's one example just on this chart. And this is just the S&P just from over last week. Now, let's go back to this one. This one I thought was very interesting, right? Market makes a high back here. There it is. No, right here. I'm sorry. Right there. And it makes a high on this bar. Market goes up and makes a higher high in the next bar. And I drew this horizontal line to show you, which I found, I caught this one and I couldn't believe that it had happened. It happened so fast, it was crazy. The MACD was actually below the 0 on this bar. So the MACD on this bar was there. So we had massive divergence. So the MACD was nowhere near making a higher equivalent. And look at the break that we got on this bar by seeing divergence. Now, once again, it's not a buy or sell signal, and it wasn't like you straight up just sell it because you have no idea that's going to happen at the time. But I was like, man, that's strange. Like there was selling pressure on this bar and it just kept going and going because the MACD was massive divergence from the prior high, which I found to be extremely interesting. So now I look at it and go, if my strategy is in a long, or if I'm looking at a possible short, I'm either going to try and pound them short, or if I'm in a long, I might be skipping town a little bit earlier, I'll be in long. So that's what that really told me on the 60-minute. So I like these 2-for-1 scenarios. I like twofers. What do I mean? Is that I like when I see a stochastic or a MACD divergence, but I truly like twofers the most. Why do I like that? Because once again, divergence to me is like, it's confirmation. So if I have a scenario where one is showing divergence, yes, I like that. But if I have multiple from 2 different indicators using different calculations and different rules to get there, then that's really even sweeter. So when you look at this one right here, market, so this is going back to a similar time frame, and just the past week in the dollar. This is the U.S. dollar. Market goes right here in the MACD. MACD makes a low. Market's making a low right there. Swing low, goes over, right? MACD goes back to 0 right here, right? And so whenever the MACD goes back to 0 is where it sets it. It's different than the stochastic. Stochastic, I need 2 bars, and it just moves a little bit slower. It's less frequent. But went back to 0. Then the market goes, and it makes a lower low over here, and you can see the MACD started drawing the dots, right? So you see divergence from there to there. Everyone with me on that. It makes a lower low, and then boom. Now, when I looked at the stochastic, it was interesting. Stochastic had it at a different time. Let's erase this board, and let's start over. Now stochastic had a low here, 2 swing lows on that bar. Market goes down. Stochastic remembers this point right there. That was the low at the bottom. Okay, now market goes, it got below our negative 20 into our zone. It goes down and it makes a lower low on the dollar. Now I have MACD and stochastic. When I look at it over here, I see that the stochastic is higher, it makes a higher low than the previous low. And bang. There we go. Another time where we come in and we see multiple divergences. So I look at that and go, hey, the dollar could be ready to rally. That gives me a lot of information. I actually had support here too that they were testing. I looked at it and said, boom, and we did get a little bit of a move off of that. Now what's important to know is that when you are looking for these divergences, when you have 2-for-1 scenarios, those aren't coincidences. Those are really strong confirmations. And whatever strategy you're looking at, like maybe that was a fib there, or maybe there was something else that you looked at, that's going to give you a lot of information to say, hey, maybe I should step in and buy it, or if I've been short, maybe I should be covering. I want to talk about identifying a false breakout. We talked about this a little bit, right? We talked about this at the beginning. Here's the VXX. It's the VIX, right? Moves pretty much opposite of the S&P, it should at least, right? Nothing's guaranteed, but so when you look at this, this is interesting because I looked at this the other day and I was like, man, this is a really interesting move. This was just on June 6th and June 7th. And this helped me out with my S&P trading. And I'm going to show you something here that was really, really, really interesting. We started to make a low. So we know how to identify a stochastic. We know how to identify a MACD at this point. And I'm showing, like I said, my indicator draws the dots and it draws the lines in there for me to identify where they are. So I saw this poking its head up there. So I noticed something. I said, okay, here we are. We had stochastic from point A to point B right here. I went and looked at it on the stochastic, and there it was, point A to point B. There's a divergence right there. It's going lower. Okay, now all of a sudden, it did end up not being divergence right there, but at that moment it was divergence, and I'm not trading the VIX, but I'm looking at it saying, we're going lower with divergence. And then I went and looked at the MACD, and the MACD made a low right here at the same time as the stochastic, went back to 0 right there. Then the market was making lower lows, but the MACD was consistently staying below the 0 mark at a higher low than the previous one. So this whole time, this MACD was telling me that it was staying divergent. We dropped off the stochastic, but I was looking at it going, man, that whole time, and all of a sudden MACD went positive. And I started to look at that, and I said, okay, that's very interesting. So I'm going to take you to the next slide and show you why. Now, I'm not trading this market, but I'm going to show you what this helped me with. And this is important. So then I go and I look at the SPY. You know, you could trade the ES, the SPY. I trade the ES. I'm using the SPY. The reason why I'm using the SPY in this instance is because this is easier to put on the time frames to mirror each other, because if I put the futures are 24 hours a day. So by comparing that chart, it just is not going to look as good. So I look at the SPY for these indicators as well. So let's take the highlighter again and let's go back and look. So now SPY, stochastic divergence from point A to point B. You see it, indicator draws it. There it is, divergence. Goes up and makes a higher high again right here, divergence. Now, at the end of this, MACD has divergence. MACD makes this peaks right in here, okay? This is the peak high. Then the market goes back to 0, or the MACD goes back to 0 right there, X marks the spot. And then the market goes up and it makes a higher high, and you see that the MACD is way lower. So it's getting divergence the same exact time, right? Same exact time as stochastic. This is huge. So now I got a twofer on SPY. I'm just coming off of a two for one on with the VIX. I'm going, this could be a lower high of the move. right? Okay, let's move on and look at the next chart. Here they are mirrored. Why is this so important? Well, because what I like to look for, and I say this all the time on my Twitter account, if you're only looking at one market, and I say this with all due respect, if you're just looking at one market and you think that you're going to find the answers for your market by looking at only your markets on different time frames, you are totally kidding yourself. It does not work that way. Markets work with other markets, especially in this day and age. Recognize what day and age you are in the markets. We have algorithms, high frequency trading that can see markets, how they're moving in different markets and how that could potentially move your market. So when I see a scenario where we're getting divergence on a low in a correlating market and divergence on a high in a correlating market, look at what ultimately happens to both of them afterwards. It's a really great way to identify a trend and when markets could reverse. Now, you don't know when it's going to happen, but I am looking at that very carefully and saying, as a day trader or as a long-term trader, I'm looking at this and going, that's valuable information. That could confirm trend, or that could tell me that trend is going to reverse, and that's exactly what we saw here. That's why I like divergence so much, because it tells me when they're retesting lows or highs, what's going on. Could this thing be reversing? Could it continue? You know, you didn't see divergence back here when we kept going higher. You didn't see it there. You didn't see it there. You started seeing it, you know. This is where you got the double divergence right here, right in the middle. And that's not by accident. That is not by accident that you see that reverse. So that's why that's so important. Now, let's talk about something I feel very strongly about. As a trader, you're the quarterback of your strategy. You know the play is called, you know when to call but you need to know when to call the audible. So I'm using Tom Brady and the Patriots versus the Baltimore Ravens. Some of you may say, I can't stand either one of these teams. Why is he even showing me this? I'm not a fan of either one either. But what I am a fan of, and I respect, is their decision making. Maybe not last year for the Ravens or the year before, but for the most part, they've been a good defense for a lot of years. And we all know that New England has been a good offense for a lot of years. So what's interesting about this? What I think is very important is that when you are a quarterback of a strategy, you have to be able to make decisions. Your strategy says go long. Okay, it says go long. It says target 1 or target 2 or whatever, how many targets you're looking at. At that moment, you're faced with a decision. Do I go in full? Do I go in medium? Do I go in small? Do I hold it to the final target? Do I hold it only to the first target? Do I trail my stop? Do I not? So as a quarterback, same thing. Do I throw it to the first guy? He's open. He might get stopped a little bit later because the defense is playing pass. So maybe I throw to him for the short game. But there's only a minute and a half left in the clock. So maybe I shouldn't throw to him. Now there's Edelman. He's in the slot. He's coming up. Maybe I should be going to this guy. Next we have guy on the outside. Maybe it's Gronk. Okay. Maybe I should go to him. All these decisions. And Tom Brady ultimately is going to say, everyone's playing pass, so what I'm going to do is I'm going to go to the wide open receiver or running back right here because I think that he could potentially take it down the field. Why is this important? Why am I showing you this? This is important because, okay, because as a trader, you need to know when to make that decision. If a quarterback's sitting there going, who do I throw it to? You have to analyze things quickly and do it. That's why confirmations are so important. When's divergence less effective? When markets are trading overnight with low volume and on short time frames. Don't look at divergence during those times. It's much less effective. In markets with very low volatility, divergence isn't going to work as well. I trade 2-year and 5-year. Those markets, divergence is not nearly as effective. Once again, how do you become a better trader using confirmation? Here's one of the greatest putters in the world, U.S. Open this weekend. Why does he have a caddy behind him looking at his putts? He wants confirmation, everybody. Just as a trader should. The best people in the world at what they do go to other resources for confirmation. That's what I'm teaching you today. Now, how can you confirm a retest of our high or low? This is an interesting scenario. Let me go back. I clicked it. So what I did in this particular instance was I was looking at Apple and I was like, okay, what's happening in Apple? Apple is now, I'm not an active Apple trader. So what I like to do is I like to see what's happening on the big picture of it. You got divergence on this one right here, right? Then you have divergence right here. Now, I also noticed that we had multiple highs there, just below the $100 mark. So when I looked at that, I said, Apple could be topping at 100. I looked at that and basically said to myself, hey, the fact of the matter is that if I'm long Apple, this is a strong indication. So once again, like I said, you're not using this for buy and sell recommendation, but you're looking at it going, this trend might be reversing. And sure enough, it did. So I like to show you something I look at, because I've been looking at Apple and thinking, you know, maybe some trade scenarios, and that was very informative to me. A question I get all the time is when people ask me, when should I buy or sell a Fibonacci retracement? Because this is one of the things I get all the time. Well, look at crude held halfway back right here. I want to show you something. Crude held halfway back right there. The red is halfway back, or actually 618 back is red, yellow is halfway back. Why didn't you buy it at 38 back? Why didn't you buy it at halfway way back? Well, at this point in time, what I felt to be very interesting was we had stochastic divergence right there. You could see in the middle of that circle. At that point in time, we finally had it on, a fib. So that was a reason to step in and buy it. And look, we got a strong reaction off of it, right? Now, let's go back and look at this. Next time, halfway back, right here, 38 back. Did anyone buy it? No. Halfway back there. Why would you buy it there? No. It goes to 618 back, right there again. This time, both MACD and stochastic confirmations. You can see that by my green line and my blue dot. So at this point, you're saying, we have confirmation here. Now I know to step in and buy it. And look, that's when you had the confirmation, and that's when you had the biggest move off of it. You didn't catch it the first time. You caught it on the retest. As I said, I don't try to buy high and lows or buy lows and sell highs perfectly. I wait for retests, and it shows me. In this particular instance, look, you got the nice trend up. The bigger move was the second time, all from looking at divergence. This is very, very important to know. It slows you down as a trader. It gives you that confirmation. Now, you know, that confidence. Another scenario. I want to talk about this one, right? Everybody look at this. Was there a time where you saw divergence on any one of the retracements? The only time you saw it was on the 50%. And at that point right there, it went back up to 38%. Only time you saw any sort of divergence on a chart. You didn't see it there, right? And here you actually got sell divergence. Look what happened. The market broke. So instead of holding on to a fib, thinking it's going to continue to push higher in the euro in this particular chart, you didn't get divergence, so you didn't buy it. Yes, it could help you when you shouldn't trade too, because sometimes to me that's more valuable than knowing when to get in. This works on all charts, everybody. It works on multiple, you know, tick, volume, daily, weekly, monthly, any kind of chart you want. My favorite 60-minute time frame. Those are the examples I used today, because I believe 60-minute works the best, because I like it to be able to identify medium-term trend. I'm going to get into talking about a workshop here in a second. This was one of, look, I could put in a lot of testimonials, but this one to me really, it was very important. I've worked with Michael on this. He was in our previous our workshop. He said, after attending Anthony's workshop on using divergence, I started to recognize scenarios where I should hold on to a winning trade longer, when to possibly cover a trade sooner, and when to stay away from a possible bad trade. I was like, this is the greatest thing anyone could ever say to me, because he is now identifying scenarios for himself. He's now taking the ball and running with it, and that's ultimately what we try to accomplish. So I want to offer you an opportunity to join me for a workshop. Power Strategies workshop. I'm going to teach you how I use MACD, how I use Stochastic. I have specific rules and settings to use these indicators. This is extremely important. You need to have rule-based indicators and strategies. That's what we're going to go over. It's a 2-hour course. It's live June 25th, 10 a.m. to 12 Eastern. It is going to be recorded, so if you can't make it, don't worry about it. You'll be able to get the recording. And you're going to get a video on my 9 instincts you must have for day trading futures. I am a firm believer in instincts over rules. I think rules and instincts go hand in hand. I think it's extremely important to understand that. And I will tell you that I've gotten more people coming to me and saying, geez, I cannot believe I had all these rules written on paper when it's so simple. All I had to do is create instincts. Because anybody that says that they have rules and they're written on paper and you don't know them, then they're really useless to you, because in trading, it's all about, as I said at the beginning, it's it's about, look at that picture that I talked about with all those words, and it says, you know, goals, decisions. I said we make as many decisions or more than a brain surgeon. A brain surgeon doesn't sit there and have rules written down on a piece of paper. You need to have instincts. And I'm going to cover all of this. And really these workshops are more like trading workshops because I bring in my traders that I have taught in the past. I always offer them the ability to come in. All of our members can come in and attend these workshops. And we just have a great time talking about markets, and everybody always learns something, myself included, because the teacher always learns from teaching the students. It's one of the reasons why I do this. I've actually refined my trading from doing this. Now I have a little caveat to throw in there, right? If you don't like it, I'll give you your money back. I mean, you're a trader. How about this? You make a trade, join me for $97, and I believe in karma. So it's like if you are someone who's like going to go and join and pay the $97 and you want your money back right afterwards, fine, I'll give it to you. It's not going to change my life. But I can tell you this, if I help you and it works, then you pay the $97 and you take valuable information because I always deliver. I always over-deliver. And you can check this out by going to beacontrader.com/now. And I look at it and say, you're going to spend money on who knows what, on Amazon or anything, and you know when you buy it, you can get your money back, right? That's what I'm doing. I'm basically saying, hey, buy it, see if you like it. If you don't, hey, guess what? I'll give you your money back. Not that big of a deal. I think that's extremely important. I don't want to help somebody that says this was not valuable to me. That's why I believe in karma, that if you like it and you do it, great. Well, here's a fraction of what you're going to learn. I want to go over this. Remember, beacontrader.com/now. Sign up. Step-by-step instructions on our specific settings and rules for determining divergence using MACD and Stochastic. You need these rules to determine it. I gave you a glimpse of what it looks like today, but you're going to need the rules to get behind it. I'm going to show you how I prepare using divergence. I'm going to show you how I scan using for divergence. I'm going to show you how I create lower risk trade setups. I'm going to show you why it's important to have divergence when looking at support and resistance lines. You saw a glimpse of that today with Fibonacci retracements. And building confidence, that's what this is about. Knowing when you should trade bigger, knowing when you should trade smaller, or knowing when you should not trade. Remember, you have to go into work every day confident as to when you're going to make your decisions. This is huge. This is extremely important, and you're going to get that video, 9 Critical Instincts You Must Have as a Trader. Who's this not for? My Mike Myers, twisting his beard guru. If you're looking for a guru, I cannot stand when people call me a guru. It bothers me. I'm a trader. It's what I've been my whole life. And cannot make a decision if you complicate things. Don't even bother coming, because people ask me 5 million questions. It's like, look, you're going to come in. If you can come in and know that you're not searching for a holy grail, you can come in there, go to beacontrader.com/now and check this out. Like I said, I guarantee you're going to learn something, and this will be valuable to you. And if it isn't, as I said before, you have the opportunity to get out of it. You say, hey, it didn't help me. Sorry. Don't give me my money back. Okay, those are not. And who's this for? If you're serious about making money in the market, if you know your success is tied to taking action, if you can follow a simple set of rules and methodology. I always say this, and I surround myself by smarter people, but I don't complicate things. And I've had a lot of success trading futures and in the markets by simplifying things, just like this divergence I'm going to teach you, and going in and really able to sit down, make a clear decision based off of rules, and go ahead and attack the market. That's exactly what I've done in my life, is by making things simpler, clear, confidence, confirmation. You're going to learn all this in our Power Strategies workshop using MACD and Stochastic Divergence. It's a 2-hour course. Like I said, it's live and recorded. June 25th, 10 to 12. I hope to see you there. I want to thank everybody who's attending today. I didn't get a chance to thank all of you at the beginning as I had come in, and I want to thank you. And as I said, I do commend you for coming in, asking questions to traders, and putting yourself with an opportunity to attend these workshops. Like I said, I would not be where I was if I did not attend workshops like this or ask traders questions. So I know markets are busy. go in there. Remember, you're more of a risk manager than you are a trader. If you think with that mindset, it will definitely help you out in your execution. I hope to see you in this Power Strategies workshop. It's not too long from now. It's actually only 9 days from now, so it's on June 25th. Go to beacontrader.com/now. Thank you, Live Market Mastermind, for having me. I wish everyone the best today, and trade well.